Please note that World HD posts on social media may include statements concerning financial market trends and are based on current market conditions, which will fluctuate and may be superseded by subsequent market event. The investment strategies and broad themes discussed in World HD live streams, recordings, and social media posts may be unsuitable for certain investors depending on their specific investment objectives and financial situation. Information and data contained in posts and on live streams have been obtained from sources believed and checked to be reliable, but not guaranteed. You should note that the materials on the social media platforms are provided as is without any express or implied warranties. Past performance is not a guarantee of future results. All investments involve a degree of risk, including the risk of loss. Any comments made in the materials are opinions with no guarantee that any expressed course of events will actually transpire, and no compensation has been paid to any person providing a testimonial or comments.
Can you see by the dawn's early light, what so proudly we hailed at the twilight's last gleaming, whose broad stripes and bright stars through the perilous fight and the ramparts we watch were so gallantly streaming, and the rocket's red glare, the bombs bursting in air, gave proof through the night that our flag was still there. Oh, say does that star-spangled banner yet wave o'er the land of the free and the home of the brave?
Good morning, streaming live on Rumble, X, and YouTube every weekday at 8 a.m. Eastern Time. This is World HD. Today is Tuesday, November 4th, 2025, day 35 of the government shutdown. We're getting close, I think, right? Probably going to see something happen, but I think we're setting a record. I think the record is maybe like 35, and so I think we're at it now. So it's almost for sure we're going to set a record on the longest shutdown. And so with that in mind, our goal in here is to use the harmonics and markets to work toward getting a jump on what's really going on in the world. And we've seen that. I think we're seeing that with this dollar. Okay, the dollar's been going up the last couple days. It's nice when that happens, when you see the technical stuff kind of come together, you get an idea, and then you get a harmonic structure after that, right? It kind of confirms you're ahead of the game, right? We're ahead of the game, because to me, the harmonics is getting us ahead of the game. We have, this energy buildup zone, and we have the targets, the 1/8, 2/8, 3/8, the halfway, the 5, 6, 7, 8, the full upside objective. And then what happens when it gets to the full upside objective, right? It gives us kind of like we've seen in stocks, right? We've seen the stocks get up to the full upside objective, react to the full upside objectives. So again, even if we punch through, it should give us another place to measure the risk against. And so we're seeing that with the dollar. And this is a big deal. Last night I was on, helped Aaron Day out. He was traveling. He was out at a Brownstone conference out in Utah. And so he was on his way back. So after the show yesterday, he's like, "Hey man, can you fill in for me tonight?" So I did. So I put some stuff together yesterday and did that. So I may not have everything exactly the way we want it today. We might have to look at some of the economic data off of Forex Factory instead of having it on our sheets. But other than that, I think we should be good to go. I've got a lot of good clips today on BlackRock and what's going on with this tokenization. And sometimes, it's so good to work with Aaron because it's so good and so bad at the same time. And what I mean by that is, you sort of get in your little world and you think, you know what? I'm just used to this. I call the markets like street violence. It's like I get in there and I'm trading and, it's a lot of punches and jabs and occasionally you get a left hook in there or something like that. You kind of get used to that fight. And then, you're putting together this show and kind of keeping in mind all the time, okay, what's the best thing? What's the most important? Because we can't cover everything, right? We're swimming in the ocean. We can only touch so much stuff. So what's the most important thing to cover? And then, like last night, Aaron's like, "Hey, can you just kind of cover technocracy with markets?" So I thought, well, I'll just go through currency, debt, energy, equities, commodities, just like we do in here, because I think those are the 5 important segments. And how does that touch up against this technocracy? And so this is the good and the bad of working with Aaron is I kind of get in my little world of just, everyday street violence in the markets. You're just punching and jabbing and fighting against the bad guys. And you sort of just get in that zone and you're like, it's not so bad, right? I mean, the world's not that bad. And then last night you do this technocracy thing and, I've got my part of it and I go through and then he comes in after and we did do a little bit of after discussion. And then Courtney Turner came in and another guy came in, Steven, he came in as well. And they were talking about some stuff. And I bowed out because 1, I was tired, but 2, my little echo, me with the technology, right? There's always something that's not right. So So I was just like, that's good. I'm done. I'm good. But the point is, listening to that stuff and we covered this Stargate thing, right? And we cover, the healthcare and these different things. And this is the good of working with Aaron is that he just keeps digging, as we do in here, right? But we dig in a different way, right? We're digging in terms of the markets and what's going on. Aaron's digging in terms of, what's the technocracy behind this? What does this mean for, his area of focus, which is really kind of this healthcare space. I mean, that's what he's healthcare commerce. He's kind of has a background in that. And excuse me for that. And this Stargate thing is looking really bad, right? As we dig in deeper. And then we get Palantir earnings last night. So it's in that same frame of reference, right? We get Palantir, the earnings come out, revenues look pretty good, and yet the market gets hit yesterday. Well, is it because of Palantir? Is it because what? Then you could say, well, it's because Wall Street was bashing it. The AI space is overvalued. And it probably is, right? We're seeing circular references like crazy through there. We're every day, yesterday was a $38 billion deal with OpenAI, Amazon, and NVIDIA. And again, it's who's getting these chips on their servers, on their cloud, and who's getting the revenues from that, and how's this getting paid for. I'm not sure how transparent that is. There's probably a fair amount of things there's probably this is probably the way it's working is there's some things that are on balance sheet, the things they want us to see, and then there's certain things that are off balance sheet. And this kind of ties in with the debt because we also see Google, Alphabet, coming out with like a $25 billion debt offering. And since today's debt, it's like, okay, that's something we can talk a little bit about on the debt side of things. And right now, debt's pretty cheap for them to issue. And with high, with the Mag 7, because their balance sheets are what they are, just like we were talking about, it's like how much of it's real, how much of it's not real, how much is on balance sheet, how much of it is shady. Time will tell. It always does, when there's a washout. And with that in mind, there's, one of the things Aaron's been talking about is this whole technology front. There's a go for broke mentality here, and I think we're seeing that with like Meta, okay, and Zuckerberg. $1.5 billion to acquire one person for this AI, a talent, and someone who obviously must be pretty talented and believed to be valuable in this AI, revolution and push forward. but they're not having that much success yet, right? Meta is one of the ones that's really struggling. Zuckerberg and Meta. We've seen Oracle be able to issue debt, piece of cake, right? Corporate debt, no problem. More people show up than what they need to show up. So therefore it gets, the yield is good. The yield comes down, right? When that happens, there's a lot of people there. You as the debt issuer can say, you know what? We're going to lower the yield on this. We're not going to pay as much because why? Everybody wants it. So it's perceived that it's more valuable debt, that it's safer debt, and you get a cheaper borrowing rate. The higher risk you are, obviously the higher interest rate you have to pay to compensate people to take on that risk. So we're seeing the little bit of shuffle. And the thing is that doesn't really get covered much in the markets, right? People say, oh, this stock's up, that stock's down. But a lot of things to watch here is how is their debt being absorbed? Can Meta get the same interest rate, the same terms as someone like Oracle or NVIDIA or Google, Alphabet, right? Those are going to be the things to watch. And as this Mag 7, which is driving a lot of this, the earnings, skewing the markets on the upside, and they have been for quite some time, skewing the markets to the upside. What happens to these guys as this go for broke, winner take all type of mentality unfolds? What's going to be the fallout? Okay, it's probably not going to happen in 6 months, a year, but you can see, and this gets back to the harmonics, right? I'm not sure that yesterday's sell off or overnight sell off last night has really anything to do with Palantir or even Wall Street saying the stuff's getting overvalued, right? This is hopefully what we're starting to see in here, that these harmonics, we saw the levels in there, right? What was it? 47,797 in the Dow, and what was the one in the S&P? And we'll just take a look at these here in a second because we can get an update. Could probably look at these at the beginning of the show, the end of the show, and I doubt much will change. Not much usually happens this hour of the morning. But then we had this 6909. That's what it was, 6909 in the S&P. And So we saw those things become important, right? Market popped above, came back down. On Friday, sold off, went back up into those levels. Yesterday, we saw the Dow hugging that 47,797 for a long period of time, and then we get the rollover, and they just pounded it, right? And then it bounced back, and then they just pounded it again last night. So is this that what we're talking about with wave one, wave two? Maybe, maybe, right? We want to see some kind of a second wave here. And we saw a little bit of that, but it's very small fractal, right? Not what we're looking for something with a little more substance to it than just a little tiny, overnight swing in the market. We want to see some kind of follow through, and then we might have a top in the market. So thinking about this corporate debt, thinking about stocks, thinking about earnings. Okay, the earnings are coming through fairly good. I haven't seen any major blow ups in the earnings. And yet sometimes the market just reacts the other direction, and they'll always come up with a story. Oh, this is Palantir, right? Or this is Wall Street doing this or whatever. But we had these harmonic structures last week, 2 weeks ago, and we saw it reacting yesterday. Now, so I'm not sure that any of that stuff is having an impact, because tonight they'll come back. If you watch, it's just so funny. All right, I just have to say this: if you watch Bloomberg and you watch their coverage every day, they have this little thing at the bottom, and they're constantly running like little short, 4 or 5, and that's probably why I like Bloomberg. Well, I I dislike them all, but the point is, how do I put it? I prefer to watch Bloomberg because of the little things at the bottom, right? It just rolls through stories constantly with a little bit of text, right? Very short, condensed stories on what's going on. So you'll see like this merger happened, whatever. But every single day they cover like crude oil, the metals market. And in the morning they'll say gold's going up because of this, and then it'll go down, and they'll say, "Oops, gold's going down because of that." And you just have to laugh, because they're just trying to slap something to the movement of gold. It's clearly they're not calling any market; they're just slapping some story to the gold movement, right? So gold moves, and now they're like somebody in the newsroom scrambling. Okay, what are we going to slap on this moving down in gold? We got a 0.5% move down in gold. What are we going to slap on this for? When this thing comes around again, and we have to run this thing on at noon, today or whatever. The same thing with crude oil. You'll just watch them, they'll just slap a story on it. It's so obvious when you watch it for more than a week. You'll be like, these guys aren't doing anything. They're just slapping stories on stuff, they don't care. I mean, they just flat don't care. And I don't know. I don't know. I just find it funny, right? They're supposed to be helping people, with financial markets. They're just getting the result. The market comes down, and it's like, hey, what are we going to put on that? Bam. It's really completely non-productive, right? It's a farce. It's a joke, right? It's a complete joke. And it and you'd have to see it for yourself, right? If you'd have to see it for yourself. I mean, I can only explain it so much. You just have to watch it. Okay. All right, so let's keep rolling here. Let's jump into some economic data today, and we'll look at these charts right away. I want to look at the stocks this morning and talk through that. Okay, we talked a little bit about Palantir. Yeah, let me hit this stuff though. I'll tell you what we're gonna do. Okay, and then let's go to this first. Let's hopefully that's right. No, there we go. Okay, let's do that. So let's just actually, oh boy, I'm really a mess. Okay, let's do this. Let me go and let's look at the overview for the week. I think the big takeaway for this week is this: that okay, there we go. The big takeaway for this week is FOMC speakers. All those central bank meetings we had last week, 4 last week, we have 2 this week. It pretty much covers the world in terms of these central banks. We're watching these central banks potentially losing power, and not just cycling through power. Sometimes, they're front and center, central bank movement, raising rates, lowering rates, doing whatever they do, becomes a big focus. And then they sort of dissipate for a while, and then it comes back again, right? Kind of cycles through this whole thing. But I think this time there's a good chance that we're seeing the wind down of these central banks, whatever that means. I don't know what comes after this, but we're seeing the wind down of this. And we talk about this, like our Federal Reserve, and I say this over and over again, dual mandate, price stability means inflation, and maximum employment, that means jobs, job creation. And if the AI is going to have more of an influence on this job creation from the corporate level. Remember, we watched the government numbers get rigged. Okay, that's obvious, right? The last administration was rigging the government numbers. Now, the private sector, what was going on in the private sector? There's not much the Fed can. There's one, they can't control that narrative. Okay, the economy knows whether we know there are surveys being done. There's private surveys. The investment managers know, with or without the Bureau of Labor Statistics and the jobs number, they have a good feel of what's going on. And if this AI is going to continue to be a big revolution, it's going to have more of an impact on jobs than the Federal Reserve is going to be able to have. Okay, same thing with the interest rates. They're clearly not able to get a grip on this stuff on their own, and they can't even focus on that, right? They're not even talk. I mean, they talk about inflation, but they're really focused on other things. It's not their primary focus right now, because if it was, they would be raising rates, right, to get interest rates down, all right, or to get inflation down. They'd be raising interest rates to get inflation down. So they're sort of lost in no man's land, all right? And I think we're going to see that more with these central banks, like Bank of England. I want to talk about that today. Rachel Reeves, right, the Chancellor of the Exchequer. She came out, she's doing exactly what we suspected she would do. And, and I'll save that. I'll save that, right? But these governments are in trouble, okay? And the central banks, therefore, are probably also in trouble, okay? So with that in mind, we had 4 central banks last week. We have 2 this week. That's the majority of them. And now what we're watching is what's going to happen with these the speakers, all these FOMC speakers that come out this week. Right? I think we had a couple yesterday, a couple more. I'm sure we're going to get more today. We'll take a look at that here in a second. That's probably a good reason. I mean, this will work out great because we can just scroll through the week and just count how many FOMC speakers there are. This will work out well that we don't have this today. Okay, but I think that's the big takeaway from this week. What's the spin after last week's central bank meetings? What's this? We got 2 more this week, and then what are all of these, the U.S. Federal Reserve, FOMC speakers, what are they saying? Because we know we have dissent across this thing, right? We have Stephen Moran saying lower interest rates a lot. And then we have Schmidt saying raise interest rates. Let's go after inflation. And then we have the middle. And anybody in the middle that kind of takes a shift toward raising rates or stepping down toward Moran and saying, yeah, I think we should cut rates. This is what we're talking about. Do we go into the end of this year with a 50 basis point rate cut in December? Okay. And can they get this 10-year note to move? We need to look at this 10-year note today because it's just not moving, right? And it's got plenty of reason to move. Would some shift this week out of these FOMC speakers make this 10-year note move? And is that maybe what's being picked up in these markets, right? Is that maybe what's being picked up in the stocks? Some of the sell-off, okay? And I've thrown this one out there because getting interest rates down is very, very important for the survival of our country, okay? Refinancing this massive amount of debt that we have and at a lower interest rate locking it in is very important, okay? And then trying to create growth. So if we see some sort of would they trash the U.S. stock market at all-time highs? Would they push it down? Would they allow it to fall? Would they get behind the narrative on it? Because again, if this thing's at a topping, if it's getting toppy up in here, and it's getting ready to roll over, that they can get behind this thing in the narrative. They can kind of drive this thing lower, right? It's very easy for an administration, if they want to trash it. Now, why would they do that? It doesn't make any sense, right? Because you got midterms coming up. It wouldn't be a good thing, but how important is it? And would they wait? That might be the last desperation call to get interest rates down, right? Create this flight to quality into treasuries. And it's that important, right, to get these interest rates down. Would they go to those lengths? That's the question. And so just keeping that in mind. So that's a big takeaway. FOMC speakers this week and what kind of influence, where do things tip with all these speakers coming out this week? And I say we just do that. Let me do this. We'll go in here, take a look at that. Let's just scroll through here and see. So we had yesterday, let's just look at these FOMC speakers first. So yesterday we had at 10 o'clock yesterday, we had FOMC speaker Goolsbee. We had FOMC speaker Daly at 12 o'clock. Then we had Macklem out of Canada. Then we get Cook, that's U.S., FOMC at 2 o'clock. Okay, so we had 3 speakers yesterday. And then this morning we had Lagarde out speaking early this morning. And then Lagarde spoke again at 5 a.m. But here we go, FOMC speaker at 6:35. That's ours, Michelle Bowman. And then we get, let's see, what else do we get on the FOMC? Maybe that's the only one today. That's the only other FOMC speaker I see today. A couple others around the world, though, right? We get this Nagel always out there speaking almost every day, so that's not a big deal. MPC, Monetary Policy Committee out of Great Britain. So that's their version and of our FOMC. Okay, and then here we go Wednesday. Let's see how many we get on Wednesday. Not too many. Actually, nobody on Wednesday. That's interesting. Okay, but then here we go Thursday. This is, I think, when we start loading up, we get a bunch. Here we go. So it starts at 11 a.m. We get FOMC Barr, FOMC Williams, Hammock. We get Waller, Paulson, Musalem, right? All day long. So we get 1, 2, 3, 4, 5, 6. At least 6 on Thursday. And let's see what we get on Friday. We have FOMC Williams, FOMC Jefferson, and FOMC Moran late in the day. So that's a lot. So we're talking at least 10 times the FOMC's speaking this week. And I think it could be a tipping point, right? This could create something significant. There's a chance that one of these speakers could tip things. Okay, so let's go through what we had yesterday. I just want to scroll through this. So yesterday, the big things were in the U.S., we had the ISM manufacturing PMI. It was expected at 49.4, and it came in at 48.7. So worse than expected. That's this one right here, 10 a.m. Hopefully I can highlight that a little bit. There we go. Then we had ISM manufacturing prices expected at 62.4, came in at 58. That's a pretty significant miss. Let's take a look at that chart here. So again, you can see this thing falling. Last 1, 2, 3, 4, 5 of these that we've had. So all the way since really July, I would say June, July of this summer, it's rolled over, and we've had every month since then has been negative on this ISM manufacturing prices. So prices coming down, okay? That's a good thing, deflationary. Let's take a look at this one. Let's look at this ISM manufacturing PMI. Okay, so again, this thing's 50, right? It's a diffusion index. So anything above 50 is expansionary, anything below 50 is contractionary. And this thing's been pretty contractionary all the way since the end of 2022, right? That's, I think, the big data points for yesterday. And then last night we get, Australia keeps rates the same. This is that other one that we had this week. We get the Bank of England. I think it's on Wednesday or Thursday of this week. We'll get to that here in a second. But Australia held, okay? And Australia's kind of been in the news a lot. Remember, we talked about this with, are they siding? They've been with China because they provide a lot of goods to China for steel and so forth. They also paired up with us last week and the week before with the rare earth minerals and signed a pretty big agreement, right? The leader of Australia was in the Oval Office working on a deal with President Trump. Okay, so then we go to, so that was last night. Then we go to today, and let's see what we've got today. There's not a whole lot of data today that's really worth looking at. I don't see too much on here. Yeah, there's just not that much. I mean, even in Japan, there's not much. They're going to get some central bank type stuff, monetary policy meeting minutes and monetary base year over year. Probably not very impactful. Maybe a little bit of an impact on the yen, but nothing that's going to really impact our markets. New Zealand has an employment change. It's interesting to watch, right? New Zealand is a decent size economy, but it just really doesn't have much of a global impact on things. Okay, so that's that. And then tomorrow, just looking forward, what do we have tomorrow? We get ADP, advanced data payrolls. Even though we're probably not going to get our jobs data on Friday, it doesn't look like there's any way we're going to get the BLS, this big, non-farm payrolls data on Friday. This is the normal series of events. On Wednesday, we get the ADP. Then we get all these other ones, the JOLTS and so forth. Okay, and then looking forward to Thursday, we get the Bank of England. Okay, so that's this last big central bank that's going to meet this week. All right, out of the 6 big ones. Okay. All right, so I think we're good there. Let's roll on. We'll get some of these headlines. There's some interesting things here. I've got some clips. So again, I keep combing through the stuff from the European Central Bank, Christine Lagarde from last week, right, when they met. But then there's this, last night it got me thinking about a few things, and I saw a couple clips on Larry Fink. So I want to go into that today and go through like this last conference that they were at and talk about, just refresh us who Larry Fink is, right? Pull some of his quotes, pull some of the things that he said, really talking about this tokenization, and this is the good part of working with Aaron. Like doing these things last night with him is it just as much as I don't really want to hear it, I have to think about this tokenization and where things are going. And that's what Larry Fink, that's what we're going to primarily focus on with Larry Fink today is on this tokenization front. Okay. Let's get rolling here. Government shut day 35. We talked about that. Palantir earnings and revenues were solid, but the stock market rolled over. Let's go ahead and take a look at the stocks while we're doing this. Let's jump in here and we'll take a look at this. So let me pull this S&P up. We've got, here's our level, this 6909. Okay, this white dashed line. Let's go ahead and add this. I think this is a good reaction we should put on here. This one, and then we get a reaction here for sure. Okay, so remember, this was an important, again, we had the one at 65.47 or whatever that number was. It's still a ways away, so 65.74, 65.47. I can't remember what that was. That was that big monthly one we worked on for a long time. Then we had this one, right? This is that one, the old one was the NASDAQ and the S&P, right? 24,126, I think it was, and the NASDAQ and 65.74, whatever that one was in the S&P. Those were those big monthly signals that we've been working on since, I think, the end of May. So June, July, August, September. It probably filled it sometime going into September. And remember, I say, usually a monthly signal, we're talking about 6 to 9 weeks, something like that. And that's not out of the realm. That's about what we were for that full upside to hit. Kind of crazy when you're going through it. You're like, really? We're going to come off Liberation Day lows in April, and we're really going to rally another 13%. But sure enough, we did. And then we get another weekly signal, not in the NASDAQ, but we get one in the S&P and the Dow. And these are the signals that we're paying attention to now. Okay, and this is this one right here, the 6909. And, you can see we got a little bit of a reaction on the way up in here, and then it punched through, came back, spent a lot of time around there. This was probably the Federal Reserve stuff last week. Remember, we talked about that stuff coming in last week. So we had a lot of volatility. You can see there's opportunity in here when big data points, and this is another reason for these data points is sometimes you got to wonder, right? The narrative, the government, the central bank, they love this thing because it's this big event where they control the narrative, right? They control your mind, right? They control what you think going into it. They control, what is thought at the time that it occurs, and then they can spin what people think after it. Okay, they can slap stories on it and not include things they should and include more of things that they shouldn't. Okay, and they can skew our minds. The other thing that can happen is these fund managers, the big boys, right, the BlackRocks, they love these things because, whether they know the information ahead of time or not, they can still exert their will at these points in time. And a lot of people have to show up because it's like an event, right? It's like a boxing match. It's like, okay, at 8 o'clock, the bell rings and out they come and, everybody's got their dukes up and it's fighting. So the point is they know that there's a lot of liquidity at these points in time. And so if they need to move positions, that's a time for them to move things around, right? When there's lots of eyeballs and they can stick the junk that they don't want anymore on somebody else, okay? So losing some of these big data points like this would not be a bad thing in my mind, right? It would actually probably improve the quality of the markets for all of us, okay? It would take away that rip-off window of time that they get when they get to exert their will. They pull us all into their little liquidity trap, and then they stick us, and trust me, this does go on. Okay, so anyway, back to this, the 6909, right? This was a nice one, right? Get a nice retest right there to 6909. This one spiked through a little bit, so you could obviously question that one. I don't because it's a quick spike, didn't last long. Then we get this one, okay? And then you can see this market last night gets a little bit of a move up. We get an energy build there, okay, right in here. And sure enough, and again, this is why you don't know which way these energy builds are going to blow out. In this particular case, because it's below 6909, okay, and you can manage the risk against that, and you see that energy come in, you could probably be thinking about getting short when you see that energy build, right? And if you're wrong, you've got the 6909 to lean against, okay? All right, that being said, market gets hammered overnight, goes sideways. Let's take a look at the Dow. Let's take a look at this one, because this one was really hovering below yesterday. All day yesterday, and even Friday, okay? Here was this 47,797, okay? And so this was it on the way up, kind of came up, didn't quite get there on this one, but got close, okay? Did get there here, okay? And Then, you could see it retest here, spent a lot of time there, and then just spent a ton of time here, right? Multiple retests at this level in here. This was all, I think, on Friday. 10th, yeah, this was Friday. And then you get it here too. You get an energy build, right? But we get constant retest through here as well. And then we get a retest right there. And then this thing just fades away. And now it's kind of hovering around the old halfway. Now, this is like the rock effect, right? You throw the rock in the water, ripples go to the shoreline, hits the shoreline, and starts to bounce back. You get overtones, right? Harmonic overtones that come back. And they're less predictable than the first time. Sometimes they're actually more predictable, but they're unpredictably, if they're more predictable, that's an unpredictable thing. Like you can't bank on going in and saying, well, I think when the waves bounce off the shoreline, I know what's going to happen. All you do is you just get points to measure against, right? You can't really, it's hard to predict a whole lot when the waves are coming back off the shoreline. When the sound's bouncing, again, you pluck a string, you can predict the wave going out, but then it hits all the walls and hits all the things in the inside a room, and you don't know exactly what's going to happen when it comes back, right? It's not perfect, right? It's been distorted, okay? And that's the way I think about this too. Even though it came down and hit the halfway, we can mark this off and say, okay, it came back down to the 3/8. It spent some time around this, and now it's hovering around the halfway. That's all fine, and you can use it to manage risk against. But it just becomes a little. Sometimes it's unbelievable how good it can be on the back side, right? As it retraces back down, it can be amazing, but it's just hard to count on it. You can't count on it as much. It's a little more squirrely. But nonetheless, we see this 47,797. That's the big key. 6909 in the S&P, that white dashed line. 47,797 in this Dow. Are these levels going to hold up? We can potentially think about this. This is some kind of a top, whether it's a tiny little top and this is just going to get blown through again, or this is going to lead to something else. That's why yesterday I spent some time showing, right, that deep overvalued on all those different global markets. And I could pull that up real quickly again and just show that, okay? I just want to kind of rehash that real quickly. Let's take a look at this. And there we go. Okay, I think it's that one. So this is what we're talking about. Upper left, we've got the Dow. That right column, the red, that little red block, that's the monthly column, overvalued. S&P, same thing, right column in the S&P, overvalued monthly. NASDAQ, right column, overvalued. 3 in a row, right? Each one of them, last 3 months, overvalued, overvalued, overvalued. Go to the Nikkei, overvalued, right? Go down to the Spanish IBEX, overvalued. The Euro Stoxx 50, pretty much the same thing. UK FTSE, same thing in that right column. Monthly's overvalued. KOSPI, way overvalued. Daily, weekly, and monthly, overvalued. Then we go down and we look at the Topics Index, right? Same thing, overvalued on the monthly. Look at the Singapore, right? Straight Times on the right-hand column, monthly, overvalued. Same thing in the Hang Seng, right? Overvalued. Pretty much every monthly time frame is overvalued. So with that in mind, could we be seeing some kind of a top here? And could 6909 be it in the S&P? Could the 47,797 in the Dow be it? We saw them have daily, weekly overvalued. Those burn off. We saw a couple pushes down. The market came back. That's what we talked about. Could push down, burn off the daily overvalued. And inside of that, this monthly still hasn't been burned off. Okay. Is it going to burn off with a sideways move? It can do that. Or we could see some kind of a top put in place and some sort of a big sell-off. All right. So that, I think, covers that stuff. And we'll come back and look at, let's just look at the 10-year note while we're at it, just in case we don't get to it somehow if I get sidetracked here. All right. Let's look at this thing. Hopefully I can get to that quickly. We've got, okay. So this is that one we've been working with. Same kind of a thing here, right? We've got the upward sloping trend channel. Okay, we've been watching this for forever, and this thing just rides this red line, right? The lower end of this trend channel. It just keeps riding it, riding it, riding it. And here it is again, just sitting on there, right? Over and over and over again, right? It's just been toying with this thing the whole time. And, we've had this for quite some time, all the way back. I would say this thing was able to be drawn probably, I'd say somewhere in this time, right around in here, you could probably put together this trend channel. For sure, after you got this, you could say, okay, 1, 2, 3, at this point, you'd have 1, 2, 3 points, 4 points right there, and you have a low. So now you could start to put that thing in, and I would say somewhere between, October of 2023 and January of 2024, you could start drawing this trend channel. So you would have had, essentially what, 2 years worth of usage out of this low up to this high, right? Again, you don't know for sure that that's what's going to happen, but it gives you a good idea. At least it's a place to check and say, this could be a low risk spot, right? Up in here. Sure enough, it was. Market gets slammed. Now you could say, well, this is terrible, right? I've been sitting here trading this thing since, all the way since through this area based off this trend channel, and the thing broke down. It scared the heck out of me down in there where that big yellow circle's at, and now it's just hugging this thing. This is a frustrating trade, and it has been, okay? But again, there's energy by the blue box. There's an energy build, and this is sometimes what it's about. It's about keeping a memory of what's gone on, being aware of it, paying attention to what's going on, and seeing what is it going to be that's going to spark this thing. Is there something coming out of these FOMC speakers this week? One of them's going to shift in a direction towards Schmidt. Rate hikes. Is one of them going to shift more toward Moran and give more rate cuts? Is Bowman, is Chris Waller, right? Is the Fed chair going to be announced this week? Is it Rick Reeder, right? Is it Christopher Waller? Is it Kevin Warsh, right? What does the market do? Could that be a catalyst to make this thing move? What are the things that we want to think about? When we hear it happen, we're like, might be what's going to drive that 10-year note. What's going to make that happen? Could it be this FOMC speakers this week? Could it make this 10-year note move? And could it push this market up? Because again, I don't think this administration is going to stop trying to get this interest rate down, but they need to have the transmission come through the markets. It's better when the markets do the driving, but right now it seems like we're trying to force this thing higher, because if we don't, we're going to higher interest rate on our debt, and we're going to go off a cliff, right? A fiscal cliff. And that's what all these governments will always do. They'll always try to save themselves, okay? So that being said, let's check the dollar, right? Here's the dollar. We've got this, harmonic structure. I won't go through the monthly again. I did it yesterday. We did it last night for the Technocracy Roundtable. I went through the dollar, bigger picture, this converging triangle, the upward sloping trend channel since 2008. We go over that all the time. We watched the 4-hour, right? That was this one. I will take a quick peek at that. We'll just, I think this is it. Yeah, this was it. This was that 4-hour right here. This is the one we kind of watched before we had this new harmonic structure. Can the dollar pop up above that purple shaded, line, horizontal zone that's going across the screen? And it did. Okay, and then we got to the daily, and now we're looking at this 102.25, right? That purple shaded zone up there above the purple line that's, the darker purple horizontal line that's going across the screen. Can this dollar pop through some of these levels and basically push up to that moving average, right? And will it then get kind of trapped in this zone? Will it get trapped in this area right here? This is what I'm thinking can happen, right? It kind of gets trapped in that little area, and it creates a nice little trading pocket for us. Pushes up, we can unweight the trade, comes back down, retest that purple line. We can buy some more, up, down, build a position in there for potentially more resolution on the upside and a push through that like 102, 102.50 area. Okay, and then we looked at this Swiss franc, right? This thing's moving along quite nicely. We do have the harmonic structure in that. Let me pull that up here. I know this doesn't probably matter to most people because they're not going to trade the Swiss franc, but it's such an important market to figure out, like, what's going on in the world. Is there a tectonic shift taking place here in the world? Are we moving from, does this tie in with the technocracy, right? Does this tie in with a big global power shift? Does it tie in with, look, we're the war front. I mean, the war drums are beating this week big time. I wanted to put a little more of the story on this with Hegseth, but the point is this, that he's out talking about, let me see if I can find this. He's out talking about troops in South Korea have flexibility, meaning, remember, this is on the back of that Asian trip, okay? And we talked about defense being a quiet fourth story. It was the elephant in the room. Okay, again, we're going to talk about soybeans. We're going to talk about chips. We're going to talk about rare earth minerals and metals, and all those things are important. We're going to talk about TikTok. We're going to talk about, all this stuff, shipbuilding, ship ports, access to ports, all these different things, But really behind the scenes, one of the elephant in the room was probably the defense, right? President Trump alluded to that in Japan, when he said, thanks for buying our defense goods, and we've got your back no matter what. We have your back. Same thing kind of South Korea, and it's all directed toward China. And that's why I don't think Xi was so happy okay, after that meeting. And here we go. Here's Hegseth continuing to pound. South Korea. Any U.S. troops in South Korea have flexibility. What does that mean, right? Now, we could go through and make a. I think the headline speaks for itself. Then we see the talks of ground attacks in Nigeria. Okay, we see talks of tensions in Taiwan. Okay, we know, you know, that's really the elephant in the room, right? Taiwan and China. And then we hear talks of taking out Maduro in Venezuela. So we're hearing fair. And then, of course, we still have Russia, Ukraine. And of course, we still have things going on in Israel. That's really not subsided. Okay. So there's quite a bit of tensions going on around the world. And the question is, is there some kind of a shift taking place? And is this Swiss franc going to help us pick up on that? All right. And so here's the new harmonic structure on this thing. And so I did put a couple more levels in here, right? We have this is where it came in. It just came in on right in here. So I need to kind of clean this up. But where that up, I don't want to put yellow and confuse. We always put that in purple. So let me stay consistent with it. There we go. Okay. That doesn't show up very well. Thought I could take a shortcut. No shortcut. All right, here we go. Okay, so that purple circle, that's where that thing essentially came in. And let me blow this up just a little bit so we can see it. So that's where it came in. I think that's where it came in. End of the day. Actually, it would have been after this. It would have been a little later than that. It's this thing's a little too soon. It's shifted to the right just a little bit, and that's where it would have come in. Essentially right in here. Okay, something like that. So I don't like it when it just breaks to the downside. Sometimes it shows power. Sometimes it shows direction and commitment. I would rather have seen this thing trade that range for a while. Why? Because we had a prior low back in here. It would have been nice to see it spend a little time in here, maybe something like that, build a little bit of energy, and then make the break. What that means to me is got out of the gate aggressive. This is probably going to be a sloppy trade. We have to be very careful with it. It's either going to go straight to the full. It's two things tend to happen when this. It's either going to just go. Gold loves to do this, right? Gold did this from, mid 2014, 2017, you'd get a signal on that thing and you'd get it on a Friday, and Sunday night that thing would jump out of the gate 6 o'clock when the futures markets open up, and it was just gone. And you're like, this is unbelievable, right? And it would just go, and it would just fill the objective, done by Tuesday, Monday, 1 or 2 days, weekly signal done. That could be what the Swiss franc might be doing here. Is it just going to go, right? Or it's going to get sloppy. Okay, it's just going to trade. If it would have traded this energy, it would be my belief that if it traded this breakout zone, it would have given us, and then it would have broken out. It's sort of gotten it out of its system a little bit, right? The indecision, right? The choppiness. It sort of gets it out of its system, and then it's ready to make cleaner moves. I would expect we're either going to get one big swoosh down into through the halfway into the full downside objective here, or it's going to get really messy and choppy, and we're going to have a lot of work cut out for us, anybody who's trying to be short this thing. But that also means opportunity. If you're patient, and this is the hard part, right? Are you aggressive or are you patient? And that's really the coin you have to flip right now. This thing looks like it's going to go to the downside. It makes sense. Dollar's moving to the upside. All the parts and pieces are there for this thing to move to the downside. But this is when I say sometimes being right and making money are two separate things. You can say, well, we had this breakout zone. We knew where it was going. It was going down to this level, which I don't have marked on here yet, but I'll mark that. We knew it was going, and yet I still lost money. How did that happen? Well, because if you make the wrong decision and you get aggressive and you get yanked around, then all of a sudden you're behind the curve, right? Now you're like, oh, I lost money. Then you want to try to get it back, right? And that's the worst thing you can do is try to get your money back, right? The key is to just clear your head and just trade, right? Do the right things. Sell on strength, buy on weakness. Buy on weakness, sell on strength, right? And I've learned that the hard way, so I'm just trying to, shorten that for anybody who has interest in it. There's a very valuable cost savings trading tip, Don't try to get your money back. As soon as that enters your head, you're in trouble. The key is just go back to doing what's right and be patient, right? Even if it's an aggressive move, you're still going to get opportunities. Hopefully that makes some sense. So those are the big takeaways, right? I think we covered some good stuff there. Let me come back into here. So again, stocks could be rolling over. We have the levels, 69.09, 47,797. Deep overvalued on those monthlies across the board, across the world, across the U.S. for sure, definitely also across the world. Are we going to see some kind of a pullback? Remember, 10% pullbacks are typical every year. You're going to get a 10% pullback. The question is, they don't always happen every year. Sometimes you'll get 2 in a year or 3, or sometimes you'll skip some. But these markets have been on a rampage, right? It wouldn't surprise me if we see a correction. Could we see a correction in the end of this year? What would cause it? Lots of, all this unrest, the military defense unrest that's going on, all these things we just talked about. Could be any kind of stumbling that goes on in earnings. And sometimes it is just what it is. There might not be reasons. They'll slap reasons on it, but it's just the markets need to do what they need to do. All right. Okay. Quickly, I just want to rehash this just because I think it's important. Okay, so yeah, Palantir earnings solid, yet stocks down overnight. We hit that. Okay, this COP30 summit, we'll take a look at that here in a second. But let me just cover this. Let me make sure. Okay, we covered that as well, Hegseth. Okay, Supreme Court tariff, that's what I wanted. All right, we talked about this yesterday. This vote, I think, goes through tomorrow. Now, it won't be approved. I don't think they'll release their decision until later this year. I think that's what's going to happen. So even though they meet tomorrow, I'm not sure the decision comes out for quite some time. I think I may have misunderstood that going into the weekend, because I thought this was going to be a bigger deal. But then I start thinking, is this a decision, or is this just them getting together to deliberate on this decision on the tariffs, on Trump's tariffs? So I think it's the end of the year, right? And so the question is this: if during this period of time, if they feel like, if they get wind that this thing isn't going to go their way, there are other statutes that he can use if this thing's going to get rejected or it gets rejected. Okay, but it will probably have some impacts unless they get out front of this. Okay, so this would make for a messy 3 to 6 months, because there's other ways to do what he's doing. It's just this is the most efficient, right? Most efficient, and it gives him the most power. The other thing that can happen here, right, is that this is a congressionally decided thing. Okay, so could the Supreme Court rule, and President Trump's already got the Congress ready to revote on this, right? He could already have them putting together a bill that says he's allowed to do this. So even though the Supreme Court could rule, they're ruling on what the law that Congress has, put out there. So he could automatically already have a pretty quick election set up in the Congress to just change the law and give him the authorization on this. Now, what kind of headaches, what percentage decision vote would he need for that? Then we get into that. You know what I mean? Does he need a majority? Does he need just to crack does he just need the Republican majority, or does he need more than that? I don't know what it would take. Some of these things are significant. Some of these things are pretty easy to pass. Okay. All right. So let's see. So that's the big thing there. I wanted to go through and then the other thing is the revenue, right? That's sitting somewhere. What if this is already starting to hit the Treasury, right? So all the revenue that's getting collected for these tariffs, what happens with that money? Where's it held, and where's it going to go? Okay, if this ruling goes down, does that have to be given back? And how painful of a process is that? So those are the things to think about. Last night I covered this in pretty good detail, the Section 232 tariffs on the steel and the copper, Section 301 tariffs, which were part of the negotiations with China last week, the IP rights and the technology transfers. The Section 301 tariffs were the ones that were also used on Brazil. So again, some of these were politically driven. Like the ones on Brazil were clearly, there's no defense issue there, and there's no IP and technology transfers, and there's no real risk there. It was definitely a political decision to put pressure on Brazil. Maybe back on China again, but again, political pressure, Bolsonaro, maybe China, so forth. So these are the things we're watching for. Which Section 232, Section 301, right? How can they be used? Some of them maybe some of them get shut down. Maybe they break it apart. Some of them get rejected, but some of them get to go through, right? I don't know how this is going to be decided, but that's what we're watching for. Okay. And then this, we'll get to that. Okay. Let's just hammer this one, and then we can get to these. Then we can just pound through these clips. Okay. The UK, this is not unexpected, right? The UK Chancellor of the Exchequer, Rachel Reeves, right? She's back in the news. No surprise. Same thing with France. We talked about France for a while, and then they kind of get it back together. They get a cabinet, right? They get Le Cornu back in. And everything sort of settles down, but has it really settled down? Or is it just sort of like dissipated temporarily? And that's what we've been talking about with the UK, right? Remember what, 2, 3 months ago, Rachel Reeves was almost ready to be kicked out as the Chancellor of the Exchequer. She was in tears. Keir Starmer came to her defense, kept her in there. Okay. And now we fast forward to this point in time where here we go, right? This is about tax and spend. So what they're going to do is they're paving the way for higher taxes. Okay. The people aren't going to like this, right? And she, not only that, instead of just saying, this was going to come all along and just taking it on the chin, she's blaming it on the previous conservative administration. Okay. And so, and she's also blaming it on global trade frictions hurting the UK economy. Who's that? President Trump, right? So again, looking for a scapegoat, okay? Trying to not put the pressure on her. And remember, we've talked about this, and this is, look, I think women are brilliant and beautiful and amazing, but I think they get used and abused in some of these power positions of power. And I think she might be in that position where, they're using her and she's like a shield for them, okay? And this is very unfair, right? I think it's very unfair to women. I think it's very unfair to the position and the role. And I think it's in some ways maybe she deserves it because she's power hungry. Who knows? I don't know her. I have no idea. I've seen very few interviews with her, so I don't know her personality. But this story's far from over, right? We can count on that. You know, she almost got ousted once. It wouldn't be surprised if she's on the chopping block again here in the next couple of months, right? Same thing with France. It will resurface and then it will subside. And then UK will resurface and then it will subside. It's never like this stuff happens and then it gets remedied. This is going to go on and on and on and on, okay? And this goes back to the sovereign debt crisis, the falling apart of these central banks and so forth. All right. I think we're through most of that stuff. So what I want to do is get into some of these clips. These are some great clips, I think. Again, sad, frustrating, good in the sense that they're revealing, okay, of who Larry Fink is. This guy, remember, he leads BlackRock. He also is now the head of the World Economic Forum. We're going to see this guy surfacing. I almost can't believe that. That's almost hard to believe, right? That this guy can be both of those. And then this guy is going to become a problem for us. All right. And it's starting to heat up. And that's why I wanted to run this stuff. Here he is. I think this one is him talking. Yeah, this is the most recent conference. Okay. No, let me go to this one. Let's hit this cop. Let's just run through this. Boy, do we want to skip that? Let's skip this cop thing. Tell you what, I'll run this and we'll come back, and then I'll leave it at that. I've had another one to run. We'll save that
From
one for
November
tomorrow.
3rd to 5th, Bloomberg Philanthropies will convene global leaders from government, business, finance, academia, and civil society for the COP30 Business and Finance Forum, a 3-day series of events ahead of COP30 in Belém. The forum will focus on strengthening multilateralism, accelerating the implementation of the Paris Agreement, and connecting climate action to people and businesses.
Okay, so just briefly speaking, this thing's a scam, okay? This is a way for them to generate money, funnel it into this thing. And just briefly speaking, since it's debt day, the whole goal here, in my opinion, was to find a way to create this climate scare, again, fear. They always love to operate out of fear, okay? They're operating out of greed, and then they try to impress fear upon us, okay, whether it's COVID or it's a war or it's the real estate crisis or it's the NASDAQ bubble or it's whatever's coming next, okay, they always try to lay the fear out there. And they were going to lay the fear on us that the climate was going to change and the waters were going to rise and, our ozone's going to be depleted and, we got to kill the cows. We can't have the cows because they're causing all this ozone, issues, depletion and all this stuff. But the real goal here was to rip us off for another 35 trillion, right? At the point in time when this stuff was really hot and heavy, we were at like 30 to 35 trillion on the back end of COVID. And this stuff was really picking up. And now it's been diffused. Like the U.S. is not going to this, right? President Trump, our government, our administration is not going to the COP30 in Brazil this year. Now, there's corporate interest there, of course, okay? And we're going to get into that with Larry Fink, okay? Some of these clips are going to go into that. Like, they get to these people ahead of time, and he tells it to you. You almost can't believe it, right? I mean, you can't believe it. And that's the problem. These guys are getting so bold in what they're saying. You can't almost believe, right, that they have the guts, you can't believe it. I just almost can't believe it. Anyway, This was going to, I think they were going to take us, they even said it. Larry Fink and Brian Moynihan, I have clips of them. I should probably dust them off and pull them out, and I probably will here. I'm trying to make a note of that. But they said, like, we can take the U.S. debt to 70 trillion, and if we don't do it, then who's going to clean up this climate change thing, right? We have to lead the world. You know, we have to spend the money. We have to show the world how to do this, okay? And clean up the environment, you know, and get this ozone thing and climate change and bring the temperature down and, you know, shoot all this stuff into the sky. You know what I mean? You know, all the, you know, the trails, you know, the chemtrails, you know, we got this is all connected. And these scam artists, you know, they were using this, right, to rip us off for another 35 trillion, probably to go into this technocracy, right, to feed this technocracy movement and feed things like this AI. Like, where's all this money keep coming from? 38 billion one day, 10 billion the next, right? You see these deals just keep getting, you know, driven with NVIDIA, with OpenAI, with who's next, you know, Hyundai, you know, you just watch. I mean, tomorrow it'll be someone else, and the next day it'll be someone else. I mean, all this money's coming from somewhere. Where is it coming from? It's not all just coming from the balance sheets of these companies. There's money coming from other places. I'm almost sure of it. And that's what these things. Last year they had this COP event. I think it was down in the Amazon as well. Because remember, Biden was down there and he was walking around in the woods, lost. I can't. You know, again. Another thing you just can't believe. But again, this is a scam. It was a scandal. And in my opinion, right? That's my opinion. This thing's a total fraud. And that's what one of the things I really love with President Trump, and he'll take a stand and he will not go to these things, right? And that's a great thing. You know, I love when he does that. It gives me hope in him, you know, that he's doing the right things. I question things a lot, but these are the things that give me a lot of hope. Okay. Let's go on to this one. I'll skip that one. Here's President Trump talking about this AI. He's asked about this AI. This is going to kind of lead into kind of what we're talking about with all this stuff. I think this is an important clip.
Sir, can I ask you?
It's hard to hear, but
What's the AI problem?
That's what some of us say, that some investments
There's no
are
problem.
overreacting.
Everybody wants AI because it's the new internet, it's the new everything. It's one of the biggest things anyone's ever seen. So everyone wants it. Yeah, I mean, the only problem is if you don't get it. In order to get it, you have to be able to produce tremendous amounts of electricity. And we're allowing them to produce and make their own electricity. This way, they don't have to rely on government. And by the way, they're making electric plants that are so sophisticated and so incredible, so much beyond that companies that make and service electricity, you know, the Con Edison, all the different companies that do that and do it well, but they've never seen anything like what's happening. It's almost a revolution in the making of electricity, the level of sophistication.
okay. So what he basically was saying there, it's hard to hear. He was on the airplane, didn't have a great mic. I can relate to that. The point is that he was asked about the AI. You know, what's going on with it? Do you think there's a bubble? He just kind of blows it off. There's no bubble, right? The only problem is going to be the people who don't have it. Okay, and then it boils down to energy. Okay, the energy, and he talks about, you know, these people dealing with the energy, right? Who's going to make either the on-site small modular reactors, the nuclear reactors, or the grid, okay, or the solar and the wind, however they're going to power this stuff. He's saying it's very sophisticated, beyond what you can almost even imagine. So maybe there's something to come in this energy front that we need to be paying attention to there. All right, but this kind of ties together what we're going to what we're going to get into here with Larry Fink as well, because I think this tokenization, these carbon credits, all this stuff is going to connect in time. This is a quick one on Larry Fink when he's talking about this tokenization. And this is, just listen to how bold this is.
You know, as a huge believer of crypto and blockchain and tokenization, I mean, I want the SEC to rapidly approve the tokenization of bonds and stocks.
Okay. So rapidly approve it. All right, here we go. Here's another one with Larry Fink. This is the most recent one. This was, I think, a week ago. Him sitting at a conference. I think this is is it in Qatar or something like that? I can't see exactly where it's at, but you can tell by the audience in the background. It's obviously, I mean, you can tell where they're at. They're somewhere over in the Middle East, probably in United Arab Emirates or Saudis or something. Probably Saudi Arabia, I'm thinking. Okay. Here we go. This is Larry Fink. Pretty important clip.
I could argue
Oops,
in the
wrong
developed
one.
countries, the big winners are countries that have shrinking population. You have to force behaviors. And if you don't force behaviors, whether it's gender or race or just any way you want to say the composition of your team, you're going to be impacted. And I do believe we're just at the beginning of the tokenization of all assets. When there's somebody who's new in their role, a new prime minister, I will spend time. Generally, what I try to do is spend time before they win. It's just spending time with them and just saying, you have access to whatever information you need. And substituting humans for machines is going to be far easier in those countries that have declining populations.
Okay, so that's not the one that I wanted to run. But I did. What's amazing there is I just found out an error. Nothing like finding that out live on air. But now I figured out a problem right there. I'm going to go ahead and run this next clip, set this one back up, because I want to go back. I'll leave it. I don't want to get into deal. I figured out a major problem. So I'm going to run this next clip. And without going into details on that, I'm going to run this next one, clean that one up, because I want to show this one clip from the most recent conference he was at. That last one there was him talking about, that was 5 of some of the most outstanding things that Larry Fink has said over time. And you know what? Let me just, can I run that one again without screwing this up? We're going to run that again. Maybe tomorrow. I'll bring that one back. Let me run this one, though, because I know what the problem is, and I can't run that and fix it at the same time. So here's Larry Fink talking about, this is kind of that, what we talk about. This is a big club, and you ain't in it, okay? This is him talking about that. And then it's about, 30 or 40 seconds. So let's check this one out, and then I'll get this other one set up.
Given this access that you have, which I think is almost unique.
I do believe because of the business model of who and what we are, our reach, we're heavily involved in most countries' retirement, whether it's in Mexico, we're the largest third non-Mexican, non-Afore retirement manager. We're the largest retirement manager, non-Japanese, in Japan. We're the largest retirement manager in the UK, including the domestics. And so having that position, it's all about long-term issues, but it's things that you can't replicate because it's based on years of relationships and trust, and whether it is. And I do go out of my way when there's somebody who's new in their role, a new prime minister. I will spend time. Generally, what I try to do is spend time before they win and meet the candidates. So whether it's in Mexico, spending time with Claudia before she won, or spending time with Keir Starmer, it's just spending time with them and just saying, you have access to whatever information you need. Not unlike how technology is changing,
So
AI
and
other things. It will be changing
what's going on with this.
the technology around the plumbing of finance.
This is the clip I want to run for you, just not on my forehead. Let me just see if I can get back to this here for a second. Let's see if we can run this clip.
Please, Alvin.
You talk to central bankers regularly. What are the biggest concerns today of central bankers about what's going on in the global economy?
I would say the biggest question from central banks is, what is the role of tokenization and digitization? How quickly should they think about digitizing their own currency? What does that mean for the role of the dollar? If every currency digitizes and we have, what does that mean for bank payments? What does that mean for the payment companies like MasterCard and Visa? All these are being questioned right now. I think we spend so much time talking about AI. We're not spending enough time talking about how quickly we're going to tokenize every financial asset and the opportunity we're going to have a digital wallet and moving ETFs and other things through a digital wallet. And I think that's going to happen worldwide very rapidly. And I think most countries are ill-prepared for that and underappreciate how technology is changing that, not unlike how technology is changing AI and other things. It will be changing the technology around the plumbing of finance.
Okay. So now I have this picture in picture. Hopefully you could hear that because I couldn't hear it. I'm finding out like 3 or 4 problems I have right here. I just don't know how to fix any of them at the particular moment. So we might get stuck with this picture in picture on here. I didn't even know. I had no idea something like that existed. But that was a good clip. That was the most recent thing where he's around the table. I'm going to try to dig through that. I hadn't seen that whole thing. That's another one that I want to go through. Okay. And dissect, because you had some characters there. You have a guy, Bill Ackman. Okay, you have the guy that runs Blackstone, which used to be part of BlackRock. I'm drawing a blank on his name right now, but you had some major players there, and they're all sitting around talking about this tokenization and how it's going to impact things and how it's coming. This is coming, right? This tokenization is coming, and so what it really is the ability to put some kind of a number on pretty much anything, right? Whether it's a piece of farm ground or a machine or a piece of artwork or whatever, and they can fractionalize it. The problem is that everything now is like on this chain, and so it's now trackable. It's now, it's a mirage, okay? But it's only a mirage if we reject it, okay? And we reject their version of tokenization by itself. Probably isn't a bad thing, okay? I'm not a big fan of it. I like the way the system works. That being said, things change, and you have to be willing to accept change. So maybe we have to accept the change on this, okay? And that's fine. Because look, the system we're using right now doesn't work. We got 38 trillion in debt. So obviously we need something different, right? This thing is going to break, okay, at some point. So I'm not a huge fan of tokenization, but I'm willing to accept it if we, the people, control it. Okay. I think it can be managed, and I think it could probably even be a good thing in a lot of ways, but not in the hands of these guys. That's the big problem, right? Not if we let the jokers around that table dictate, and the other jokers that aren't at that table, right? That, basically influence that table or associated with the people around that table. If we let them do this, we're in big trouble with this tokenization. Okay, so this is turning into a train wreck. Let me see if I've got this one. Might be, I think this is the one that he talks about gold, and this is World Economic Forum stuff. If I've got the right one here, I hope I do. Remember Klaus Schwab said this is going to become an angrier world, basically an angrier world, right? And he was predicting that. And I don't think he's predicting it. I think they have this stuff staged and set up, right? I don't know what levers and when they're going to pull these things. But he's talked about, cyber polygon and creating anger amongst the people. Right here, Larry Fink is telling you, if you want diversification, buy gold and silver. But if you also think people are coming after you, if you think this is going to become an angrier world, right? Just like Klaus Schwab, those aren't his exact words, but that's his intent, buy gold. It's pretty crazy. I mean, just listen to this one.
If you believe that countries are going to continue to debase their currency, if you believe that there's going to be global rise of insecurity, owning crypto assets or gold are assets of fear. You own these assets because you're frightened of the debasement of your assets. You're worried about your financial security. You're worried about your physical security, and between crypto assets and gold, they believe there's a strong belief that is a good hedge against optimism.
Okay. Jamie, you were a little.
Okay. So hopefully everything's good. I found a different screen to put oh no, it's still there. The picture in picture's still there. Okay. Who knows? I apologize. We're learning together here. Okay. Here's Larry Fink again, talking about, this tokenization front. And we're going to do this over and over. This is something we have to focus on going forward, right? Is this tokenization of assets. And for 2 reasons. One, we have to know what we're up against, okay? The other reason is, what can we do to get off of this, to use it to our advantage, okay? Those are the 2 things, all right? Those are the 2 reasons but if we don't understand it, one, we don't know that it's a problem, and we need to move away from that, and we don't know that we need to gravitate towards something else, right? The privacy side of this, right? Because again, it's not going to be easy, right? And it's not going to be without flaws, but I do think there's an opportunity to move into a privacy setting with this kind of stuff. Okay, here's Larry Fink again.
I was with a sovereign wealth fund during this week, and that was the conversation. Should we have a 2% allocation? Should we have a 5% allocation? If everybody adopted that conversation, but it would be 500,000, 600,000, 700,000 per Bitcoin.
Okay, so that's him talking about Bitcoin. trying to create this propaganda situation. Now, again, back to Aaron Day. The way I met Aaron was talking about cryptocurrency. He was on a show that I originally did called Market Ultra. I stayed in touch with him, got to know him. That's been, 2 years ago, I would say. And I knew that he was smart, but I didn't really know where he was headed. Okay. Some of the things he said I didn't understand. I was like, I don't know what he means by that. And then you start to catch on, right? You start hearing these things, and we kept in touch, and he came on World HD when I was doing that and so forth. And early on, he was a guest that, was pretty easy for us to get on and very valuable. And then in a lot of different ways, but he's the one that called out that Bitcoin's been hijacked. Okay. And that really changed my mindset that, okay, how? And then he walked through it. Boom, 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 boom. These are it's been hijacked. It doesn't function like it was intended. It's not safe. It's not secure. It's not private, right? And he's proved that over and over again. So this guy's a great thinker, right? His ability to plow through things and get to the bottom is pretty impressive. All right. And so he's doing that. And that's why I bring this clip up. Okay. That these guys are still trying to push this Bitcoin at us, even though it's starting to fall. And that's another thing that ties in with these stocks, right? It's a risk on asset. This Bitcoin could get hammered, okay, and it could create a lot of ripple effects as well. The question is, have they sucked enough people into this? Have they gotten out of it, right, and dumped it on the people? Because I think that's what they're trying to do in a lot of different ways, right? And I know that's a lot, but all right. And then I think we have this. Hopefully, this one will run. This might have been that last one.
I could argue in the developed
Yeah, we'll
countries,
just
the
run this
big
again.
winners are
Hopefully you guys
countries that
can
have
hear this.
shrinking
This is
populations.
important.
You have to force behaviors. And if you don't force behaviors, whether it's gender or race or just any way you want to say the composition of your team, you're going to be impacted. And
I do believe we're just at the beginning of the tokenization of all assets.
When there's somebody who's new in their role, a new prime minister, I will spend time. Generally, what I try to do is spend time before they win. It's just spending time with them and just saying, you have access to whatever information you need.
And substituting humans for machines is going to be far easier in those countries that have declining populations.
Okay, so hopefully you guys could hear that. I couldn't hear it. Like I said, get out of my own picture. I can't believe. All right, unbelievable. But nonetheless, I think we covered some good ground today, and that was the goal, right? The looking at these stocks, looking at the debt market, talking about the AI space, and the equity side of it, which is what we hear. Earnings come out. What does stock do? I want to try to change that a little bit if I can and pay attention to the debt market. All right. And I think with AI, we can actually do that because I think it's a good way to comb some of the corporate debt issuance. And we want to watch that as more of are there stresses in the system and who is going to see the fallout? Again, it's this race for superiority, for dominance. Okay. We saw that in the 2001 NASDAQ bubble, right? We get this big bubble that builds up. We get a bunch of garbage.com stocks in there that have no business being in there. They get hammered. Some things come out of it, but a lot of technology came out of that, right? A lot of telecom, a lot of internet, a lot of technologies came out of that. Obviously changed our world. Our world looks quite a bit different from a technology standpoint than it did then. We may not like it. We might want to go back to the days of, the Duke Boys on Friday and Love Boat on Saturday, but that's not the world we live in anymore. And so I think the key is to understand what's going on, and it's moving so fast that we have to pay attention to this. And Larry Fink is probably one of the preeminent guys that we have to pay attention to. Okay. So again, we continue to watch the war stuff heat up, continue to watch the breakdown of things like, Reeves in the UK. But the big thing here, I think, is guys like Fink, it's time to put this guy on the front burner, all right, and start watching him. And if Rick Reeder gets chosen as the head of the central bank, right, that's two BlackRock guys in pretty prominent positions. What are they up to? Because it's clearly not an accident that these guys are now in those two roles. Head of the World Economic Forum for Fink and, Rick Reeder, head of the Fed. And what's going to happen with the Fed? What are they going to do with that? And I could run these two. We'll run these clips on the guard again tomorrow because this will tie in with the climate change. We see it going on everywhere. That's the point. Christine Lagarde's talking about climate change still. Okay. She's talking about the tokenization, digital assets. This is a global thing, right? And we're crazy if we're not putting this in our lens and we're not focusing on it. All right. So with that, hopefully, I think we covered what we needed to cover today. Tomorrow's energy. Gosh, there's so many things we can cover on the energy front. I'll try to clean the show up, get rid of this picture-in-picture, and fix these problems. This is nice. I think I learned something today too about what's going on with these silly buttons. Okay, so with that, everyone have a blessed day. Thanks so much, and we'll come back and we'll hit it tomorrow on the energy front. Thank you.